Welcome to Accounting High.
Both my partner and I were extremely aligned with where we want ultimately the business to go. And then just like our personal values are very aligned, like what we're interested in, like charitable causes, and what we're interested in, just like general trajectory of our family lives and all that kind of stuff. We're just extremely aligned. And so for us, it was, okay, it makes sense to do this 50-50 because we really are partners versus, I know with a lot of other firms, people who are staff in the firm, if you're there for 10 years and you do well, like you're just going to make partner, and maybe there's not a lot of that personal alignment behind what you're doing. But for him and I, we came from a place that we had a lot of a personal alignment, and then it was, okay, this makes sense for us to run a firm together, because I think the vision that we have for what we want to do with Dominion is really, really different.
May I have your attention, please?
Hey, yo. It's an OKR Accounting High special right here. All my accountants holding it down every tax season. Everybody right here, what you need to do is appreciate yourself. Be more intentional with your life. Stop keying data into those manual reports. Start learning about new cloud apps and automate. Let's give it to him, Anita.
You're in a spreadsheet to combine a report, a fancy dashboard, and fancy charts, and manually need a data export, and then comes LiveFlow to the
Anita, let's get it.
So up your life. Hey, auto refreshing that data, just love your life. Hey, ain't no copy and pasting, just love your life. Hey, cloud-based automation, just love your life. Hey, cause it's a game changer, just loving my life. My life, my life, my life, just loving my life. My life, my life, my life, just loving my life.
Workflow restraint sheets out of date, creating daily time constraints in case you misplace data, chasing clients as they run away. It's safe to say it only takes a few minutes to copy paste. When you finish, you wasted days as you delicately navigate. You comb through and hope cells don't break and make sure no mistakes were made. Ain't up to date, you changed the date, but now you're in the wrong decade. So LiveFlow came to save the day, upgrade old ways and change the game. The time you saved created space to double your entire client base. No trouble raising your compliance rates, eliminate migraine headaches. They integrate with live updates, so no more copy, no more paste. The data you consolidate stays up to date when not awake. Explain a way to take the same template you made the other day. Just duplicate, don't recreate. They paved the way to plug and play. They elevate amazing ways as they upgrade and iterate. A no-brainer, favorite, greatest new cloud-based tool to automate. To give a grade, I give an A, and jobs would say insanely.
May I have your attention, please?
Welcome to Accounting High. It's freshman year at a brand new school. Here, we have no rules in place as we're on a mission to set our own traditions. So hang tight and learn with us as we grow. At Accounting High, you can expect to gain knowledge in a completely different way than what you may be used to, with some fun and oftentimes colorful conversations. Whether you loved high school or you hated it, here's your chance to be a part of an unforgettable experience redone. While you're here, don't forget to follow us on Spotify or subscribe on Apple Podcasts or wherever you may be listening to us right now so you don't miss out on any new episodes. And feel free to leave us a 5-star review letting us know how the school year is treating you. In addition, share this episode on social media, tagging us at Accounting High. So sit back, relax, and open your mind because class is in session.
I repeat, may I have your attention, please?
This is another public service announcement brought to you in part
by Accounting High.
The views and events expressed here are
of the next generation of accounting and tech professionals leading this space.
The events and suggestions are not to be taken lightly. Children should not partake in the listening
of this podcast.
Anything else?
Yeah.
So without further ado, introducing the star of our show,
Scott Scarano and Jason Ackerman.
we're gonna have a problem here.
And Catherine Tindall.
Special guest, and he pronounced it.
She's got a name I can pronounce. That's our ongoing joke, Catherine, is I can't pronounce any names. But Catherine, I got
Well, that's good. You did well. You got it right.
Thank you. So, welcome to the podcast.
Yeah,
Now, you're
thank you
based
for having me.
in New Hampshire?
Well, I run a remote practice, so I'm kind of all over the place. I'm actually in California right now.
Is that where you
so
live?
I go back and forth between California and New Hampshire. I try to game the weather, but this year I'm doing it the wrong way, so I'm headed back to New Hampshire for the winter, but we'll see. I'll get my skis out.
What part of California are you in?
I'm up in Sacramento. So Bay Area. Yeah.
I love it.
So I don't get to
California
brag.
girl today.
I don't get to brag about the good weather the same way as like Southern Californians do, because they get really hot summers here. But wintertime is when I usually get to brag.
Did you grow
about this year.
up in New Hampshire?
Yeah, so I'm from New Hampshire originally, and then my husband's family's out here in California. So that's part of the reason for the back and forth.
What was the movie with Sacramento with that? I forgot what it was called. This is a terrible question.
Yeah, what is
the movie with Sacramento?
now?
I'm trying to
Lady
channel my
Bird.
inner Scott and just like make comments, but don't really know what. Am I high? Is this accounting high?
No, you're a little off your game here. Yeah, this is accounting high.
I wish I could.
Definitely, for sure.
Anyway, we'll reference it in the show notes when this comes out in 8 months. It is
There you
Columbus
go.
Day, too, which is
6 months.
which is
Probably.
yeah. So, Catherine, tell us how you got into accounting. Why did you do
Start
that?
with
Why
high
did you
school.
do this to yourself?
Why did I do this? So I started off, I actually wanted to go into medicine because I really wanted to do something that I felt like was helping people. And then the farther I got into that educational path, I realized, and talked to people in practice, I realized that it wasn't actually going to be a good fit for my personality and what I wanted to do. And my parents growing up had a tax practice where it was just the two of them. They ran out of our house. And so they told me I had some electives, and they said, just take an accounting course, see if you like it. It's a good career. You can make it what you want. And so I did. I took a course and absolutely loved it. And then also realized very quickly that my desire to want to help people actually works really well in public accounting, and especially tax, just because it's the kind of relationships you can have with clients are really personal and really do help them in ways with things that they couldn't do themselves. So that's how I got into it. And then I, through college, I always did a bunch of different accounting jobs. I tried out a bunch of stuff in private, and then I always knew I wanted to have my own practice. And so I went from, graduated, worked in, different tax practices, always with the mind of that I wanted to have my own. And then a couple years ago, I started Dominion, and now I've got a partner, and we've got a good number of employees, and things are going well. So that's my story.
Now, your parents, were they CPAs?
They were, yeah.
And they had their...
And they're weird. They had a niche, so they do a lot of work with equestrian accounts. So all
the horses.
horse breeders and trainers and race horses and all that. So that's their niche. So it's kind of it was a good lesson to me, because it taught me really quickly, especially in my practice, that you get a lot of flexibility when you've niched down your practice, and it takes a lot of pressure off of certain functions like marketing and production work and that sort of thing, because they just work with kind of a similar profile of client who has very particular needs when it comes to their tax life. So it taught me a good lesson early on of it's good to have a niche.
Now, was it just them two, or did they have employees?
They always kept it small intentionally, so they'd have like one or two admin people that helped them, but they just had the two of them. They never really wanted to make it, any bigger than that.
And was there some, did your mom do certain things that your dad didn't do, and vice versa?
No, they both were just tax, so they didn't do any bookkeeping work or any attest work, just tax. And they each had their own clients, and one would do the preps on theirs, and then the other would do the reviews. So they would, that's how they worked together.
So, what about the family dynamic? Like in the home, who was the boss?
That's what I'm trying to get at. That's what I'm trying
Who was
to get
the
at.
boss?
The mom was definitely the boss, for sure.
I hope they don't listen to this, because I don't want to give away.
They definitely won't, so don't worry.
Give it away. Give it away. If they listen, they listen. If they don't, they don't.
I think in the practice, they really did have it pretty even keel. Like, they would make decisions together. They really did have a sense of, my mom had her own book of clients. My dad had his own book of clients. And it's kind of a similar relationship to what myself and my partner in the firm have, where, we collaborate a lot on accounts, and we talk through client scenarios and, get feedback from each other on like, well, how would you do this? Or, I'm thinking this, what do you think about that? And that was kind of their dynamic. So they really did run it kind of even.
Is your partner also your lover?
No, my husband works in the firm. So that's an interesting dynamic too, but
we can get into that. Yeah. So your parents basically were like the traditional partnership then, right?
Yeah.
The traditional partnership model. You got your own clients, you share admin if they did share an admin.
Yep.
And they both kind of had their own silo of roles that were the same. But at the house, obviously that doesn't work. You can't just both be raising how many kids? How many?
It's just me and another brother who also ended up in accounting.
Did one of them raise you and the other one raise the brother and do the same thing?
This is sons of CPAs right here, literally. Sons and daughters of CPAs.
Yeah.
It's every episode with you, Ackerman, still is sons of CPAs, even though it is accounting.
But this is like a legit
students,
daughter of CPA.
Yeah,
all
family
CPAs.
Dynasty.
Now, growing up in this environment, like, what did you kind of talked about the niching part, but like, what else did you take away that you use today as far as managing a practice?
Yeah, I would say, the biggest things with them that I learned watching how they manage their practice, the first piece for me, especially when I started mine, was really embracing technology and really embracing, all the things that automation can do for your business, because that was something they didn't do. And then the other piece of it too that I just saw from their relationships is, they really came to their business relationships with a place of caring for their clients and being really personally invested in them, which I know isn't for everybody, but I think for both of them, they find a lot of meaning in their work, and that's something that I enjoy the same thing. I really like what I do because I feel like it moves the needle for people in a way that, if I didn't have that kind of relationship, wouldn't be like that. So I think those are the, learning from what they didn't do that I do, and seeing what they do that I actually, do.
So now, last question on your parents, then we will never speak of them again.
Don't go there, because I probably will. Everything goes back to your parents.
Everything. Do you collaborate with them now? Do you share like ways to run the practice?
Oh yeah. Yeah. So I helped them go paperless, or, more paperless, and then just help them with like workflow software and things like that. I still help them with stuff just because, it's, when I find things.
Did you charge them?
What's that? No.
Did you charge them a consulting fee?
No, I didn't, because it's, it's a family affair. Yeah, it's like if we start getting into the nickel and diming, I'm gonna. Yeah, I got a lot of stuff for free. No, but so we do collaborate, and sometimes when they have a case that they want to run by me, because I have different specialties than they do, we do talk about clients. And I don't know about you guys, but like I just really enjoy talking shop, and so I'm always happy to like talk shop about like, oh, we had this case with the IRS and this is what they did, or this client did this and then it triggered this weird series of rules. Have you encountered that before? Like that kind of stuff. It makes the I always joke with my brother, it makes the Thanksgiving turkey talk boring for the in-laws, just because it's like we just
they're probably like,
it's exciting for you though.
It's like,
it's exciting for us.
Please talk about politics, anything but accounting. Like this is the worst.
Yeah, it's like, and then when when new legislation comes up, and we're like, can you believe this? Like how they wrote this law, like what they're gonna do, like that kind of stuff. So, but now that my husband works in the firm, it's like now I have like free, carte blanche to like talk about accounting stuff to him, because he's
now your husband
involved in marketing.
What does he do for the firm?
So he helps with like marketing work and then just kind of some administrative stuff too. But he doesn't come from an accounting background. I've roped him in. So it's been good. It's been really nice to have him, because when you have, I don't know if you guys have experienced this, but accountants tend to be of like a certain mental type. And so when you have a bunch of people who are very analytical and then just very like numbers focused, systems focused, it's nice to have somebody who's balanced to that. Yeah.
Yeah, that's actually great. So in this scenario, who is the boss at the office? I already know the answer to that. And then who's the boss at home? Is it different dynamics at home and at the workplace?
Well, I'd say for myself and my husband, we've always just been really egalitarian. But I think part of that's just because I think our personality types and the way they work together. I've become a big fan recently of like Myers-Briggs personality typing stuff, and that's given me a lot of clarity around like, okay, this is why, you know, I'm a little bit different than say like an average, you know, person.
I'm different than the average person.
My wife's super into Myers-Briggs. She's an INFJ.
Okay. So she's a rare type. That's a rare one.
Yeah, it's like her and Hitler are the only two. No, I don't know.
I didn't know that.
No, I'm joking. I don't know what Hitler's type was.
I don't either. I got the...
I'm definitely not a feeler, though. She's a feeler. I'm a thinker. So.
Okay. Do you know what yours is?
Yeah, it's INTJ. No, she's a J. The last two we are different.
INTP?
Yeah, INTP. Yeah.
Okay, so you're the same type as my husband. He's an INTP. And then I'm an ENTJ, so that's like the Darth Vader.
Yeah. So you're the rare. Yeah, you're the Hitler.
Which is like one of the rarest for a woman, so. It's like it took me a while to realize like, oh, okay, that's why like, you know, the talking about, you know, gossip or you know, small talk is not my thing. You know, it makes sense why I'd rather be like, how are we going to build this system to fix this problem and you know, optimize efficiency. Like that's not how it's not a normal thing. So
is ENFJ a thing?
Yeah, ENFJ is a thing.
I think that's me. ENFJ A and T.
You're definitely an E. I know that. Extrovert.
E, yeah. Was that the E for EN? Okay. Yeah. Cool.
Do you implement Myers-Briggs in the firm? Do you have people take the Myers-Briggs?
Yeah, we do. Yeah, we actually type people. We try to type people when they come in. My partner in the firm's really good at it. But it's just really helpful because I think for a lot of people, you don't realize until you kind of learn about the personality typing stuff, especially with Myers-Briggs, where it's more, this is how people cognitively experience the world. And so realizing, oh, this other person is having like a completely different cognitive experience than I am, given the same situation. When somebody's, you know, like when somebody's cat died, like I'm trying to figure out solutions to that. And that's how my brain goes to it, is like, how do I organize this? How do I fix this? This is a problem for me to fix. Versus somebody who's more of a feeler type is like, no, this person wants me to empathize with them.
That's what my wife and I argue all the time. Like, I'm trying to solve something. She's like, I just want you to listen.
I just want to vent. Yeah. And so to realize like, oh, okay, other people are having a very different experience right now than me. And, you know, especially with employees, it's really good to know, oh, okay, so you're, you know, for instance, we've got a guy on the team who's an ISTP, which that type is known for being really good at tinkering on things. They're really analytical. They're really good at fixing like problems. So you're like, okay, I've got this, you know, piece of software that's broken. Like, how do we fix this or connect this to something else? They're really good at stuff like that. But they tend to be less social and they don't like socializing as much. So, you know, how you interact with the people on the team and the expectations of them. And then also communication styles. It's like, I don't force that person to have a bunch of client communication and client interaction because they don't really get a lot out of that. They'd rather be solving software problems. So it's just good to know, you know, kind of the profile of the person you're working with so that you can put them in the roles that are going to be a better fit for their personality style than, you know, having somebody who's a less social person having to do client interaction, stuff like that. So we found it to be super useful in the firm. I've found it to be very personally useful to, you know, understand myself, understand how I need to work on parts of myself. And I think for a lot of people, especially if you're a business owner, you know, you're going to be you're the bottleneck in the business, and figuring out how you can grow yourself and how you can round out your flaws and faults it becomes kind of a central part of what you work on. So
do you use it for hiring? Trying to find the right fit for a role?
Yeah, we do. Yeah, because we know certain roles are going to need to have certain, you know, orientations. And so if somebody wants like a customer facing role, but they're like not a type that.
So do you make them do like a simplified Myers-Briggs as part of the interview process?
Usually I think it's more my partner in the firm is just because usually when people do tests, they won't test for what they actually are, because when people self-report, they don't give the right information. Like how you think you are versus how you actually are usually two very different things. So my partner in the firm is actually pretty good at, you know, just having a conversation with somebody and how they answer questions and how they approach problems and that sort of thing can give you a good amount of insight quickly on, okay, I think this person is, roughly this type, just based on how they answer questions and how they interact.
Has he ever been completely wrong?
Not that I've encountered yet, because it's actually, once you get into it pretty deeply, it's actually kind of easy to figure out, because you can just see, when you pose a question to people, like how their mind works. Because it's not so much like, okay, are you an E type or an I type, or are you a this or that? It's more like, how does that person, when you ask them a specific question, how do they lead with it? And so, like, for my type, where our most dominant function it's called external thinking, which is like organizing, systemizing, problem solving in the external world. Like, when you ask me a question, I'm always looking for the problem to solve. And it's more just like seeing how people think through things is how you figure it out. So it ends up being, it's kind of hard to get them wrong. And then the other thing too is most people, when you interact, once you like get used to the typing stuff, people tend to feel the same. So it actually becomes like, oh, okay, like I start talking to somebody, it's like I can just tell immediately, oh, I can tell you're an INTJ just because like I've talked to enough of them and know what the psychological profile of that feels like in conversation, that like I can just tell that that's what you are. So that's...
It'd be interesting that we should probably do that for clients. Like,
we do it for clients too. Yeah, we personality
helpful.
Type them. Yeah, it's so helpful. Yeah, because everybody comes from a different place, and I know, like, okay, if I'm working with an ENFP, we're never going to have a phone call that's going to be less than an hour long. Like, because we got to talk about the kids, we got to talk about just like they need a lot of time, and that's fine. And I know that when I'm working with a client like that, versus if I've got another client who's another ENTJ, we only schedule 15-minute phone calls. It's like we're in there, we get our stuff done, we get out. He doesn't want to talk about anything other than, his situation. And so it's really helpful, because then it's like I know what to expect from that relationship, and I also know what the client wants so that I can reciprocate that. Like a feeler type is going to want a lot more communication, a lot more social communication, versus like a more thinker type is like, just give me the information that I need. I don't want to talk about my kids. Like, I don't want to talk about any of that. Like, just get me what I need to know, and like, let's get out of here. So it's good. It's something that we've implemented in the firm, and it's been really helpful. It's super helpful during the sales process too, because then like how to communicate with people, how much detail they want, and whether you need to let them lead the conversation versus you need to lead the conversation, like all of that stuff, it's just so helpful.
Ackerman, is it Ladybird?
Yes, Ladybird.
She kind of reminds me of Ladybird a little bit too. Girl.
That's what I was getting
I'm in
at,
Sacramento.
Subconsciously.
Yeah.
I'm glad.
So let's kind of step back a little bit, set the stage. Firm. You got a partner. Tell us the partner split. Tell us or just like the 50-50, I guess, is that what it is? Top line, bottom line, and time off that you have at the firm.
Wow,
if you don't want to share all of it, you don't have to, but
yeah, I'd rather not, just because. So it's me and another partner. We're a 50-50 split. I don't actually have a solid top line projection for the end of the year, just because well,
what was it? What do you know of?
So, we're probably going to close in around 2 million this year. Mm-hmm. And then we've got a couple core staff people, and then a lot of associate staff people.
Yeah, so you said a good number. How
many team members? Yeah.
Oh, we have like two working staff who are like
two
accountants.
Employees.
Yeah. Well, we have more employees than that, because we have other people that do like data admin and stuff like that, but they're all like part-time contractor kind of roles. How many
FTEs, if you were to have to just put that number out there? Because for 2 million, that's
we probably have like 4
total
FTEs. Yeah, if you cobble together all the part-time people.
So basically 6, and that's including your husband too?
Yeah.
Okay. 6 for almost 2 million is, again, pretty good.
Yeah. Well, we do, a lot of our work right now is credit work. And then
we'll get into the niche. And we know we're going to lead with that. But that's a little teaser.
Yeah,
So would you say how tied are you to the business? Like, when I say time off, like how much does it rely on you and your partner? It's
pretty reliant on us, just because we don't have an outsourced sales role yet. And we don't, we haven't intended to do that yet. And two, for us in the practice, it's young enough that I'm more on the side of we're still tinkering with what we want for our service lines and that sort of thing. So I'm not at the point where it's like, okay, I have my product, I have my product of the firm that I'm ready to scale and start pulling myself out of it. Ultimately that's going to be the goal for both of us, is once we feel like, we're confident with the different lines that we have and the niches that we have, and just, okay, this is what we want. We've built the tools for it. Let's start to hire in more people. Let's start to edit ourselves out. We're still kind of at that beginning, like still, really defining down what we do. We lead with the credit work, but
do you both still manage client relationships?
Yep. Yeah, we do.
Yeah, that will definitely tie you to the firm.
Oh, yeah.
Everything.
Yep.
And that's also probably why you have only 6 people. Like, you're going to have to definitely replace y'all if you step out of that role.
Oh, yeah. No, and I think for us, we've kept, we keep a lot of that in mind. It's like, how do you have to really get away from the old model of doing things where the partners are really the technical production people and managing the client relationships and managing sales and managing internal functioning. Like, you just can't have the partners do all of that. You have to really decide what's your
role.
Yeah, what your role is, and then also, what people's strengths are. Because, for instance, like, I do much better in developing systems, putting technology together, executing like strategic initiatives for the firm. Like, that's more my speed. And he does better with the client-facing work, and he's a great public speaker, a great educator. And so to have him like, all right, we need to retool our invoicing system. That's not a good. That's a good one for me because I like fixing the systems and stuff. But it's not a good one for him. Versus same thing, if we're going to do a CPE, I'd rather have him be doing the one that's doing the CPE because he's a more confident public speaker and he's a great presenter.
So are you the integrator and is he the visionary? If you don't know those phrases, are you the visionary is typically that person that is more comfortable speaking, that has the ideas person, and then the solver and the person that want to make sure all that happens and is executed is the person that's sort of like the COO or the integrator. Yeah.
No, I'd say on the vision side we're both about even keel because I do like the public speaking and reading.
On this show.
Yeah, like reading I read business books and listen to other people's podcasts and look at what other people are doing in different industries. Like, I don't really benchmark us off of other CPA firms. I'm more interested in like what other people are doing in other industries. So I think on the vision side we're both about even keel, and then I think execution wise, like I'm more oriented that way just because of my type, but we're still, pretty even keel on both, I would say.
Interesting. That's unique. Usually there's always like a clear delineation for partners. So would you say you're operating similarly to your parents, or is this completely different dynamic?
I'd say it's
obviously it's different because you're not lovers, but like the rest of it.
I think we should play a drinking game every time Scott says lovers. Take a shot. We're at 2.
No, we're at 2.
I get black out of 3, so we got one more.
There you
I
go.
probably said it a third time too. But.
Yeah, I would say, in a lot of ways that it actually does, because, it's a very egalitarian relationship, and it's not, we both have different strengths. And so, when one of us is encountering an issue that we know the other one's going to be more strong in, we pull the other one in, and it works out really well. Like, for instance, if I've got somebody giving me a hard time about something and it needs to be a difficult conversation, I'll usually bring him in for that because he's better at when somebody's given us a hard time and we have to,
So I guess
you have to push back.
Rephrase it. Yeah, let me rephrase it a little bit. So are you operating in 2 different silos where you're sharing resources, but you have your own set of clients, or is it operating more like traditionally like a business that has somebody at like a management team at the top and everything is being distributed? Like, the difference between like a traditional CPA model of a partnership versus traditional business, I guess.
Yeah, I'd say it's like a mix, honestly, because our business is kind of split up into multiple divisions. We have both him and I have our own like strategic income tax planning clients who are like regular recurring work, and then we each have our own on those sides, and we basically manage those separately, and then we'll pull each other in if we need something that we know the other one's going to be better at. But then the other half of the business is tax credit work, and so that ends up being a little more free flow. For the R&D credit work, he does pretty much all of that because that's his specialty, but we do a lot of employee retention credit work for other CPA firms, and that tends to be more like what you're saying with accounts come in, I handle certain parts, he handles certain parts, the staff handles certain parts, and it's all just kind of pre-delegated, basically.
So how do you handle pay split or income? Because I get it, that's probably going to be a source of, you would have had to work that out beforehand if you guys have your own kind of thing going on a little bit, but then you have all this other stuff coming in that's probably a decent chunk of the revenue too.
Yeah. No, and we're 50-50, so we just split it 50-50.
So regardless of
keep it
what
easy.
your book of business looks like. And
Yep.
Yeah.
Don't make it complicated.
Yeah. No, and I think for us too, the big thing going into it is both my partner and I, we're extremely aligned with where we want ultimately the business to go, and then just our personal values are very aligned, what we're interested in, charitable causes, and what we're interested in, just general trajectory of our family lives and all that kind of stuff. We're just extremely aligned. And so for us, it was, okay, it makes sense to do this 50-50 because we really are kind of really partners versus, I know with a lot of other firms, it's people who are staff in the firm, if you're there for 10 years and you do well, you're just going to make partner, and maybe there's not a lot of that personal alignment behind what you're doing. But for him and I, we came from a place that we had a lot of a personal alignment, and then it was, okay, this makes sense for us to run a firm together, because I think the vision that we have for what we want to do with Dominion is really, really different than what, the standard accounting firms do. And so that's kind of how we set it up. Yeah.
Well, bringing back the lovers again, I guess this is number 3. That's very important with a marriage. It's very important with a marriage and with a business relationship is aligning your values. We've talked about that a lot on this podcast too. It doesn't necessarily matter, the honeymoon phase. Everything is great in the honeymoon phase. Everybody's agreeing on everything. And then when it comes down to it, it's the financials or the how they spend money and their values alongside money and just alongside social.
Are we getting marital advice?
No, business advice, because partnerships never work out. Not never, but in a lot of cases, almost never. But the ones that do have alignment in the finance and the values, social and personal values, tend to always do better because they don't get into as many arguments over trivial things that they don't even realize there are. You guys may not argue as much as another partnership, and that's. It's always after the honeymoon phase that people find that out. And longer for some than others. For
sure. And I know for us, the big thing with, not to keep going back to the Myers-Briggs stuff, but, I found that to be a really important exercise to do before we started anything was we did the Clifton, I forget the name, the Strengths Finder test, if you guys have heard of that.
Yep. I have mine open right here. I'm a protagonist.
You're a protagonist.
You're an antagonist.
What does that mean?
Just Google it later.
Yeah, I think that's a strength finder, but yeah, I love those.
Yeah, so we did that. We did, he was really good on the Myers-Briggs thing, and we figured that out because a big part of it is where I think difficulties come in those relationships is when both parties are not seeing what's going on with the other one, or there's expectations that are different between them, and so the more you can get on the same page about expectations around what you can expect from the other person and what's reasonable and how they see things and how they're going to solve the same problem as you, and how do you do conflicts resolution, and how do you deal with emotions and that sort of stuff, and getting alignment on, okay, where do we overlap, where do we not overlap, where do we know that there's going to be friction just because we're different people, and we can see kind of where the differences are. That was all extremely useful exercises. That would be the number one thing if anybody's thinking about doing a partnership. It's you really have to look at that stuff. You really have to get to know the person behind, who you're working with, and really get to know them well, because that's where the problems will come from if you don't have that locked down.
And sometimes people don't necessarily know themselves, so this is illuminating.
Most of the time, people don't. So that's what people say about themselves.
Yeah.
what they say about themselves and what's actually true are usually very different, especially if they haven't done this kind of stuff themselves before and realizing, oh, I like to think that I'm, a really empathetic person, but I'm actually not. Like, I'm really systems oriented and I feel guilt about not being empathetic. And so I like to, think that I'm empathetic, but I'm actually not. Like, my orientation is just very systems oriented. So, like, for instance, that was an observation I had about myself where it's like, oh, I really do care about people, but that manifests not in me being a listening ear, but me trying to fix their problems. Like, that's what I get the most of a, thrill out of. And so just realize, knowing yourself is really important. That seems just like an important life thing in general. Like, it's really good to actually know yourself and not just believe the things that you tell yourself about who you are, because it's usually not true.
Yeah, we had a guest recently that said you never really know yourself because we're always changing. We're always evolving too.
Yeah,
so
that's true.
I always have to continue to, it's like always a continual process. Every few years we're kind of changing who we are too and evolving.
Mm-hmm. Yeah.
So let's kind of, from your parents, you kind of learned at an early age that niching does make things easier, having some kind of focus, especially
before you
in
do
this
that
industry.
though, how did you start your firm by yourself? And then how did you get to the partner?
Okay.
I just did it. I just started.
Well, why?
So for me, a big piece of it was I wanted to run the practice pretty differently than a conventional CPA firm. I wanted to switch the model from starting with compliance work to really starting with tax planning work, and that the compliance comes after that, and then modeling the whole client relationship around that. So that was something that I knew I wasn't going to get purchased from the firm I was working for with. And then also, I was really oriented towards, I wanted to have the control in the business to be able to just fix things myself and fix, to build efficiencies. So we use a lot of technology and apps in the business just to optimize things. And so I wanted to be able to do all of that stuff. And then also just have the control over, we don't do timesheets in the firm. Nobody does, clocking in and clocking out on clients. We don't do billable hours. So a lot of those kinds of fundamental things I wanted to get away from.
That's how Scott used to be until he regressed.
I don't track my time. I'll tell you that now.
You don't have time. So, so you decided to go out on your own.
Reps, though.
You try to go out on your own. How did you have some clients that you were already working with your firm that knew you would come to you? How did you kind of start your own practice?
Yeah, I had some clients that I had on my own, and then just got out there, just started marketing and doing education and networking. And I didn't buy a practice because, I evaluated it. I talked to a couple of other practitioners who had done that, and I realized for what I wanted to do, I did, yeah, because I was like, you know what, I'm going to have to scalpel so much if I buy somebody else's practice, and I'm going to have so much client attrition and inherit bad systems and inherit, clients who haven't been taught, kind of how to interact with us. It's like I might as well just start from scratch. And so I did.
What's one thing that you would do differently now that you've gone through a bunch that you did really early on?
What would I do differently? Honestly, it was all just a great learning experience. I think next time, one of the things that I would have implemented a lot sooner was we have an outside guy who's a fractional CMO for us, and I would have done that a lot sooner instead of trying to do
Chief Marketing Officer?
Yeah.
Interesting.
Because I think I learned a lot about marketing really quickly, which was great. But something, I've I've learned over time is there's certain things that are just really hard to DIY. And doing a really good job with your marketing is kind of one of those things. If you want to grow quickly and consistently and have good data and that sort of thing.
That's not your husband, though, right?
No, this is an outside guy. So my husband helps with the marketing stuff and copywriting and that sort of thing.
No,
What's
your husband is her lover.
Yes.
What are you doing here? I'm confusing all of the listeners.
And he works in the firm.
You're confusing.
Yes,
you're confusing
he's
yourself.
He's your biz dev manager, right?
Your lover
is that what he
does?
Is not your outsourced marketer. Your lover
No.
is your internal marketer.
Yes.
It's not that hard to follow, Scott. Come on. Okay, so
Just clear this up.
So
yeah.
we'll have a diagram. There's a lot of arrows pointing in a lot of ways. We'll
The
have
Dominion
that.
diagram.
Check the
This
notes.
feels like a Korean drama where there's like all of these like
Yeah.
points on it.
This
yeah.
is that's the vibe we're doing for this podcast, a Korean drama.
Yes.
That could be the title of this episode. I don't know how that.
We might
lands,
get
but-
Me Too'd, but it's okay. Okay, so you're on your own. Now, how did you decide that you want to now form a partnership with somebody?
So I wasn't actually looking for a partner. We just connected through another business connection with some of our personal interests, and he was at a different firm, and we just started talking and realized that we were on the same page about like almost everything. And so, we were like, all right, well, let's, try it out and see. And we did like a trial period, and, went well, really complement each other. And
Okay, explain the trial period. This is intriguing.
yeah, so we did like an operating agreement that had like a I don't know how you would call it, basically just a clause where if we wanted to split up after, 6 months or something, that, it would be kind of no problem to we would just split along client lines, and that would be it.
Why
So
don't marriages have that?
like a little test period. I think that's what dating's supposed to be,
Yeah.
but it's kind of not.
Yeah. You did a mail order bride thing, so it was a little different for you, but most people do the dating, living together before they get
Mail
married.
order. It wasn't mail order.
It was a
15
catalog?
years later.
No, I'm joking. So you form this partnership, and then you get into the ERC credits and the credits. So you said your partner's background on R&D credits.
Yep. Yeah, so he had experience going through audits for R&D and just had done a lot of that kind of work. We started doing the ERC for our own clients, and then I started getting approached from some other people who had an existing CPA who the CPA didn't want to do that work, but they also didn't want to go to, some random person. And so
Yeah,
they
1-800 ERC credits or something.
Yeah, which, is wise. I can probably do a whole hour talking about that, but yeah, so we just started doing it, and pretty early on in the process of the credits, my partner and I were like, well, you know what, this is going to be a really high audit area, so we need to make sure that what we do is a really high quality controlled product and build a good system around it, build good software around it, because there's no commercial software for doing them, and that we're maintaining a pretty substantial documentation, especially for the cases that are qualifying under non-revenue factors, because it's a lot of legalese and making sure things fit together correctly. But so we just started doing them, and then I realized a lot of other smaller CPA firms, it's like they don't have the time to do these, nor do they have the time to build up the expertise to do them, because oftentimes they're not very simple. And then especially if you're going to maximize things like the allocations with PPP and things like that, a lot of smaller CPAs don't have the Excel skills to like get the data in the format that they need and that sort of thing. So we just started doing them. I started doing them for other CPAs. We're going to be teaching, well, this will come out after that, but we, teaching some continuing ed on how, the credit works and that sort of thing. And, we just started making it a niche, and it just grew.
So
how do you bill for it? How do you guys structure that?
So we do a retainer up front, and then we do the rest of the bill is payable after the IRS pays. And then usually for us, we don't charge a flat percent because we're a CPA firm. We can't do that. But typically our fees are anywhere between 10 to 15% of the credit is where they fall. But it just depends on the
You
complexity
don't call
of the
it
case.
a flat percent, but that's kind of how you come up with it?
No, it just really does depend on the complexity of the case. So, if it's an aggregated claim and it's an absolute mess, and there's a lot of bad data and cleaning and that sort of thing, it's higher. But
So I'm interested. So the ERC, obviously, like, it's over. There's no, I mean, you can go back and amend, but it's not like an RD
Yeah,
credit
it's a
that you can
one-time
do
program.
every year.
yeah.
And it sounds like, a lot of people haven't got their ERC yet, so you're going to have some windfall in the next 12 months of money coming into you. Like, your practice is going to have to change because you have, I don't know, what percentage is ERC now of your practice?
It's, it's probably like 50% right now, I'd say.
So how are you planning to transition your practice from 50% ERC
That's
to
$1 million.
0%
Yeah.
ERC?
Yeah, well, so for us, we're already starting to do some resolution work related to it because there's a lot of bad claims, and that's going to keep going for a couple years, I'm assuming, after it. But for us, where our team size is so small, it's not really a big deal for us to pivot to other stuff. Like I said, my partner does R&D credits.
But what's the plan? Like, what do you guys want to pivot to?
I think continuing to do some of the other tax credits is where I enjoy that work particularly. And then also maybe bringing in more people for the income tax planning work that we do. Because right now we turn people away for that just because it's, they're much more intense relationships. But, that might be what we do is we keep expanding that part or we keep expanding the credit work. It's one of those things where this program's not going to be starting to phase out until April. And then it's really not going to lose most of its steam until a while after that. So we're, of the mind of, we'll see. Especially with, too, I'm not sure how things are going to go with Congress in the next 6 months to a year with if there's going to be more stimulus programs or more things that come up if the economy starts to falter and that sort of thing. But especially, I think, particularly R&D, we're going to keep leaning into that.
So it seems to me like the credits, like there's a bunch of specialized, like especially in R&D credits, there's CPA firms that specialize that. And also there's like startups, technology companies, like what's the one that Gusto just bought? RDS?
Artius.
So
there's Neotax and there's a few others.
So it's kind of, I guess it's, how do you see the landscape for credits in the next couple of years playing out? And where do you guys fit in that landscape?
Yeah, I think the landscape for credits is good. I think where we fit in as a firm is for people who are more technically complicated cases than like more simple ones. I see the big thing that I see for the credit landscape is the IRS enforcement budget just went up pretty significantly. And I think it's going to be an area that they target just because there is a lot of people who are kind of like, there's a lot of people who are like, just don't follow the rules. That's what I'm seeing with
all this PPP,
the ERC. It's
I mean, I don't know how many of my clients, they get emails like every day, like you qualify for $26,000. And I'm like, you didn't lose any money and you weren't closed down. So it's,
it's just
it's crazy.
And we have a longer statute of limitations on it than, normal things. Like it's a 5-year. So, I already see like, okay, well, how these are going to play out is all of these people with massively overdone claims because the company doing it was not crossing the T's and dotting the I's and actually understanding how the tax code works. And so they've massively overclaimed. And so the claims are just going to have to be redone and then taken through resolution. And so that's something that we're already starting to do some of those from people who have approached us where they're like, oh, I now realize I worked with somebody who is not so scrupulous. Can you guys figure out what my credit actually is? And we need to like fix this. I need to pay some of this back. So we're already starting to do that kind of work. And it'll be interesting to see because, with the credit work, it's nice because it lends itself to a certain amount of automation. But at the same time, you do need people that are the people who build the systems and the people who do it and the people who handle the cases. You still need a lot of professional judgment. And you can't automate all of it. So it's, that nice mix.
That's another issue that we're going to run into is like Gusto has pretty much tried to automate that, and there are clients who are checking a box that getting a ton of money and they have no idea what they just checked.
Yeah.
And that's going to be an issue too.
Do you find that you find that as a problem?
So who's at fault there? Is it the client for checking that box or is it Gusto for making it that easy?
Yeah, and that's the thing. And I think when it comes back to it, a lot of taxpayers don't realize
it's going to be both, but it's going to be Gusto. Yeah. I mean,
they're the one that's going to get their wrist slapped for stuff like that.
That's a huge fine by the IRS.
Yeah. Well,
and they're not really charging for it either. That's the other thing.
And that's the thing with these programs. It's like when you look at the R&D rules, there's a reason why most practitioners don't do them. Is because once you start to dig into it, you realize like how much documentation you need, and like how do you demonstrably beat the different factor tests, and like have it that you're clearly in the right. That's not like a check the box thing, And I tell people with like the ERC work, it's like this isn't like PPP where it's a pretty easy calculation, and then you just fill out the form and maybe they're going to pay it, maybe they're not. It's like, this is very different. Like you are completely reliant. You're you're completely in that tax professional's hands to make sure it's done right, even down to, you know, how the data is culled and cleaned and the calculations go, because you don't have any commercial software for it. And then also you're relying on their interpretation of some pretty significant things to determine eligibility. And that's a very nuanced thing. Like, does somebody meet a more than nominal effect on their business? Like, what does that mean? You know, like, what's the case law for that? And, you know, the problem that I've been having with a lot of these people that have gone to some of these other providers, it's like the provider will say, did you have supply chain disruptions? And the client says, yes. And then the provider says, okay, great, you qualify for the whole credit. Instead of like, no, like that's something where you need to do a lot of digging to actually determine that. Like a client saying, oh, I had, you know, this or that, no, you haven't done the work. Like you need to be able to understand the client's situation and substantiate everything. And that's a lot of work, you know, depending on what kind of client it is. But, you know, I think that's the problem we're going to run into with some of these like automated platforms and stuff, is like you still need a tax professional's judgment on a lot of cases, whether or not somebody's going to qualify for it, for a tax credit, because you have so many of these mitigating circumstances. You have things like, you know, case law that can come in that will change interpretations of certain things. And unless you've got somebody who really knows their stuff, especially when it's this big ticket, you know, it's one thing when it's like, you know, an income tax return where it's not, you know, it's easy to mess things up. It's another thing when you're talking about hundreds of thousands of dollars that this client might have to pay back. I'm just, you know, I'll be really, the thing that I hope for is that there's just more regulation around who can do the work and like what you can offer to the public. Because it's like, there's a reason why we have to get licensed and that we have to have a certain amount of experience and that sort of thing. And so when
they've never done that,
any regulations,
because there's no regulation on who can do a tax return.
Yeah.
Anyone can be a tax preparer. You just have to have a P10.
And I don't know how you'd implement that. I don't know that you can, but it's, you know, it's one of those things.
It's kind of the wild, wild west. The whole COVID thing's created a lot of opportunity, but also a lot of potential pitfalls. So how, you kind of mentioned like the auditing for your clients, like how are you guys protecting like the downside if you guys do a ERC credit wrong or like the interpretation changes?
Well, for us, we take a pretty firm stance in the practice where we don't process gray area cases. Like it either, you know, they meet the definition or they don't, of especially for like the non-revenue factors, you know, we can demonstrate that more than 10% effect quantitatively, or we can't. And, you know, when people are fairly close to that 10% like bright line, then it turns into, okay, we really need to be able to substantiate this or we're not going to file it, because it just, you know, it really does come down to being able to meet and beat those tests. As far as like things being calculated incorrectly, like we carry errors and omissions insurance, but we just do a lot of quality control checks. So it's not really something I'm too concerned about, just because there's not a ton of stuff that's hand done with the calculation itself. It's more just the pieces where it does require professional judgment is where, you know, there's, you know, potential for errors to come in. But I don't know if that answered your question, but that's the approach we're taking.
Well, I mean, like most firms that do tax returns, I mean, you obviously have risk in doing a tax return wrong. Yeah. But like you said, there's software, your tax software, like it's been vetted for years and stuff where like you basically created your own software or calculations or Excel or whatever to do. So it's a little different, but it's exciting.
Yeah.
And like it's needed, like people who actually experts who know what's going on and won't do crazy.
Yeah. No, and what we did
is
it took us a long time to build the tools that we use, because we did a lot of testing and, you know, we vet it against, you know, I always take the approach with anything I do, like tax returns that are other, like I need to vet this against as many third-party verification things as I can. So like comparing against, you know, when I get a tax return, it's like I want to see like a bank statement and see what their actual cash balances are. Like, is this cash balance I'm looking at on their balance sheet actually what it is or close, or I can see a bank reconciliation? Like, is there a bunch of bad activity? And so that's kind of the methodology we took for ERC, is like where are outside data points that we can use to shore up things, and then just constantly having like checking for variances. And, we have like a long checklist that we go through at the end of a project of all of the weird rules and weird circumstances that could then become an issue, for the client. Like for things like, if the client's a nonprofit, the nonprofits are only processed out of Ogden for the 941s, and they have a different mailing address. Like, just like all those weird little things that can kick in. It took us a long time to build the tools for that, but that's what we did, just like line by line, going through everything that we did to just make it airtight, so that for us now it's a fast process to get one done because we know the quality of the data is there. But initially it took us a long time to develop our tools for it, just so that we would have that assurance when we're doing cases.
A lot of people don't value all that time too that you put into it. Maybe they do.
Well, some clients do, and some
convey
clients
that.
don't. But the good thing is you don't have to work with those clients that don't.
Yeah, yeah.
Absolutely.
No, and for us, it's like, my goal at the end of the day is like, I know the audits are coming. I know that. And so we've built something that I'm just not afraid. Like, I'm not afraid in the least of, having that when it comes, it's like, all right, this is our methodology. These are this is the particular ways we decide if somebody meets a government shutdown order, and that's why we're triggering eligibility for them. Like, this is a particular, like, workflow that we take that process through of making sure that we've got everything documented, and we've demonstrated the effect on their business, and we can show all of that. And because that's the mentality I took, is like, you have to take the time on the front end to do this thing right. It's like that's really the critical thing. And so that's what we spent our time on, and so it's been good.
Solid foundation.
So what are you're kind of like a firm. It's a very interesting firm setup. So what are you most excited about over the next few years with your firm?
I think for me, I'm excited because we almost like want to behave more like a private equity firm than just a regular CPA firm. Like, we're interested in a bunch of different things, and I've really enjoyed the credit work just myself because I really enjoyed the systems and trying to basically being handed. I enjoyed the process of being handed like a big mess of, IRS rev procs and legal code, and then converting that into like a system that's actually able to get the work done. Like, I really enjoyed that process. So I'm looking forward to doing more of that kind of thing as like more tax incentives come up and, different programs are opened up, and we consider doing different things because it's nice. I enjoy that part of things. So I'm looking forward to that. And then also, as we continue to either add on more service lines or perfect what we've got, it's just nice. It's nice to see when you make bets on things or you build things and then you see them working. Like, it's really satisfying. So I'm looking forward to that.
Dope. So if you can give our listeners of this Korean soap opera drama one
Soap
piece
opera
of
drama.
advice.
I like that.
This is 100% a soap opera for sure. Maybe not Korean. I think we're Days of Our Lives. Scott's Days of Our Lives. Give us one piece of advice that you would give other firm owners.
Yeah, I would say the one piece of advice that I would give other firm owners, just because it's been my revelation of the year, is like, really learn who you are as a person. Have your practice align with that, whether you're like, systems person or client relationships. And then the last piece is figure out where you can do that, and then have a niche, like niche down into something. Don't do everything for everybody. Don't be a generalist. Like, find a niche that fits well with who you are and what kind of life you want and who you like working with and what kind of work you like doing, and then just niche down and like commit to it, and don't be afraid of it, and be patient. That's my advice.
Patient. I think I'm going to call this the cognitive accounting experience.
That sounds like a
Or
club.
ACE, accounting cognitive
That
experience.
sounds like
something
a
that.
club in Berlin that you stay up till 4 a.m. doing LSD at. So I'm down for it.
Let's do it. Or in Korea.
Yeah, for sure. Some soju shots. Catherine, this has been amazing. Okay, tell us where we can find you on the social medias, and if there's a firm that's interested in having you do ERC credits.
Yeah, so you can visit our website. It's dominiones.com. I'm sure it'll be somewhere on the screen that you're looking at.
It'll be in one of the arrows pointing.
Be somewhere. You can visit us there. I'm pretty active on LinkedIn, so that's another place where you can just get in touch with me directly. But yeah, like I said, a good number of most of the work that we do comes through other CPAs. So I'm always happy to have a conversation, and then we do like continuing ed and stuff like that. So if you're interested in learning more
We'll
about
have those courses
Yep.
available when this is released.
Yeah, they'll be somewhere online. We're doing one for CPA Academy in like 2 weeks.
Maybe it'll
and then
be
we
for
just did
Accounting
one for
High.
Intuit.
It'll be
Might be, yeah. Might be a guest faculty.
There we go.
Professor
can-
Tindall.
That's my dream.
Tindall, right? Why did you change the pronunciation? I thought you said it right in the beginning.
It's a
Change-
joke, Scott.
Oh, okay.
You're too high. This happens
I'm
all the
actually
time.
not. Yeah, I don't even know where that's
You
coming
should be.
from.
Maybe you should be.
I don't think so. Not until 420.
We got to at least wait until October 15th, right?
I don't know. I don't do
Are
any
you-
client work anymore. I don't even
Yeah,
know
you
what
guys
that
are all
means.
done.
I forgot.
Scott literally.
What's October 15th? Yeah.
Scott
There you
literally.
go.
It could be any day of the year. It could be any day of any year for Scott. That's the beauty
I
of
get
Scott.
high every day. Yeah.
All right, Catherine.
We'll end on that.
This has been amazing. Thank you so much,
You've just been schooled by Catherine on Accounting High.
Catherine Tindall,
Yeah, thanks, guys. This was
Professor
great.
Tindall. Thank you so much.
Thanks. Peace out.
Take care.